Welcome to this webinar today on the financial forecasting package developed by ESS BIZTOOLS. I'm Peter Towers, Managing Director of ESS BIZTOOLS. If you have any questions on any of the matters raised in this webinar, please do not hesitate to contact us. You can send me an email, peter@essbiztools.com.au, or make a telephone call, 0747241118. Be the expert, virtual Chief Financial Officer services. This is the opportunity that accountants and bookkeepers have by being the expert in offering business enhancing services for your clients. It means a lot more than just producing quarterly or even monthly financial accounts with nothing else. Businesses need a complete package so that you're delivering real accounting services developed for use by accounting experts. And the key component of the system which we have developed is the 52-week business enhancement system. And the key components are daily, a report relating to key performance indicators and business metrics. Sales yesterday, average sale yesterday, gross profit percentage yesterday, and whatever other key information management needs on a daily basis. Weekly performance and profitability estimates and weekly key performance indicators and business metrics. This is very important. This is what the big end of town do. In my opinion, having worked as a Chief Financial Officer and Company Secretary of a listed public company, what our organisation did, and many others do the same, they appointed an area manager, and there was an accountant working for that area manager, and some clerical staff, and they looked after a number of businesses in that area. They basically run them as small businesses, but they brought in experienced management teams, and the management teams included the manager, general manager for that area, plus an accountant. Was there to analyse the information, interpret the information, prepare forecasts, budgets, etc. That's the role I envisage you can supply to your clients. And they will become very reliant on those weekly forecasts, because that means they can immediately fix a problem if something's occurred. They expected a gross profit percentage of 34% and only got 23%. That needs to be investigated. Why did that occur? Did someone make a mistake? So that's then fixed within a couple of days of the end of that 1 week trading period. So it's fixed up. Think about what happens to most SMEs. They don't really notice that when it occurs. Well, they might, and they say, well, we don't know what happened then. And it just goes on into the annual accounts. And at the end of the year, when you're preparing the annual accounts, you might say to your client, oh, we thought you'd end up with a gross profit of around 34% this year, because that's what you got last year, but you've only ended up overall with 26%. We really don't know what happened. There must have been some problems. Well, there were problems, but they were not picked up at the source promptly. And this is what this system enables you to do. And then the monthly financial report. Now, there should be a financial report for each business activity, not all consolidated together into one P&L. You can do that at the end of the financial year. But during the year, our strong recommendation is that you segregate it into each of your operating entities. And the big end of town do this. The company I was with had about 400 entities. And we were doing weekly performance reports for all of them. Individual butcher shops, small goods factories, but some very large meat works, and cold stores and other business activities. So big organisations do this. Why can't you deliver the same service if you're going to offer a virtual CFO service to your client? And this is real-time management that the corrections are getting made in. So we're going to be able to offer your clients a daily, weekly, monthly service Unfortunately, most SMEs don't do this, and they need it to help them to survive. There's enormous challenges out there in 2024, and I know you know that. This is one way you can really help your clients. And if you have happened to outsource some of your work at present to some of the outsource organisations that then process that work overseas, what are you doing with the spare resources in your firm? This is a great opportunity for you to then be offering advanced accounting services to your clients to help them survive the difficult times and to keep your team members interested and challenged so that you don't have the problems of retention and attraction that other people seem to have. And it will also enable you to really assist those of your clients or prospects who wish to scale up. They want to go from a $1 million turnover to $5 million in 2 years. They want to go from a $6 million turnover to a $13 million turnover in 2 or 3 years. They're on the scaling up journey. You can help them because they all need help. But let's go back to the start of all this. You just can't start offering these services because, with respect, I don't think you know enough about your client. The knowledge you have of your client from the preparation of an annual set of accounts and a tax return is not giving you enough information to be the virtual chief financial officer of your clients. You need more. And our suggestion is you start with a due diligence review of your client's business so that you understand it 1 inch wide and a mile deep. You understand the key information that goes on, whether it's how they operate, who are their suppliers, where are their suppliers located, what would happen if there was a problem in the supply area. And there's problems at present, isn't there, by 2 major wars going on in the world. What's the internal control processes? Are they satisfactory? How does the purchasing work in this organisation? Who authorises the purchases? Who makes sure that the stock that's been purchased is actually received? Is it then safeguarded? Is it stored properly? Is there steps taken to make sure the older stock is used first so that your client doesn't suffer from deterioration of stock? A lot of these issues don't really confront an accountant when you're basically tasked with the responsibility of preparing an annual set of accounts and a tax return. I know because I've been there. And I've been in both situations, of course, with a public company, making sure we know all these things. And then as an accountant, senior partner in an accountancy firm, where I got to know a lot of clients because I've always supplied advisory services, but probably not as deep as I could have, some of them. What's the selling process? What's the procedure for a business to open a debtor's account? Is there any checks made of their trading history? Is some thought given into the terms of trade that's going to be advised to this new customer? Or is it a matter of, oh, you pay us when you can type attitude? Should there be a personal property securities registration for that customer? What's the process? Who does the PPSR applications? Who monitors it? If you're going to be the virtual CFO, you've got to have a watching brief over all of these items. What key performance indicators or business metrics are needed so that management gets the vital information they need to be able to effectively manage businesses? I found when I was in the public company that it's the metrics and the KPIs that managers really want. We're in the meat industry, so yields and cost per hour and cost per process were very important data, as was the cost of livestock. And then what did that livestock price enable us to set a selling price for our meat, or vice versa? What was the selling prices for meat that we could obtain around the world? And when we took off our operating costs and a small profit margin, what could we afford to pay for cattle? These were the important things. Now, this goes on in every business. Not exactly the same as that one, of course, but there's these considerations. Who does your client get input from on that? If they had a chief financial officer, they would be getting that advice from them. I think one of the reasons for the high failure rate of small businesses is there's not enough input of this vital information. The big end of town can't operate without it. They're looking for the key accounting people to be giving them this advice all day, every day. So what are the benefits of using the big business approach? You have in place then a management and an accounting discipline, because that's what they've got. And by offering the CFO services, you have covered the accounting discipline. The management side will supply the management side of the equation. But I found in my public company experience where we had a sales manager, a marketing manager, a byproducts manager, livestock manager, production manager, chief engineer, and a couple of other people, or a communications manager, that anything that didn't fit those exact titles that come across the CEO's desk, he'd send on to me and say, okay, Pete, can you sort this out? That might have been part of the company secretary's role or chief financial officers. And what was required in a lot of things was some calculations, some costing calculations. Is it better for us to do this than that? How do we change this around? These questions confront your clients every day in running their businesses. And they, in some cases, muddle through it. And think about the high failure rate. Is this one of the reasons? And this key information is then available daily, weekly, monthly, and then it's repeated again in the next month. Daily, weekly, monthly, daily, weekly, monthly. I think that's the system that we as a profession need to introduce for SMEs and make it the norm, not the unusual. So these daily results, the benefits of them is that there's some real information. And if there's an expectation that the average sale today should have been $19.20 and it only comes in at $7, it will generate an inquiry. What changed? What caused that to happen? There may have been a major special run yesterday. So management would be aware of that, may have factored in there'd be a drop a few dollars. It would drop more than that. So what else caused that problem? And the follow-up action can then be taken to fix whatever the problem is. In most SMEs, this doesn't happen because there's really not an awareness and there's no one there that can cause that follow-up review to take place from an accounting, financial management point of view. So the weekly profitability report, though, is the vital one because we've had 7 days elapsed. That could have been 7 trading days. In a lot of businesses, it will only be 5 or 5.5 because of Saturday morning. But having a result prepared by Monday afternoon, Tuesday morning, it can then be analysed by the manager with whoever's directly responsible for that business. So what I'm thinking is you may have a client that's got 2 or 3 retail outlets, it's got a wholesale business, it's got a storeroom facility, maybe a transport activity and an office. There'll be people running each of those businesses. So he should or she should be able to sit down with them on Monday afternoon or Tuesday morning and go through the results. And say, well, we had an expectation we were going to make $1,000 profit out of your business this week, and it's only showed $100. So there's obviously been fluctuations, but there may have been an unusual expense coming, and maybe it should have been amortized over a number of weeks, but that can then explain what the variation was. But management needs to know. Are you offering those services? I think you can offer them. And our product packages will assist you to do that. And really, that's the summary of the benefits that I've just talked about. Your clients will know. They'll be able to fix things. And I think once they get used to using the weekly system, that's what they'll tend to run their businesses from. So you need to make sure they're using current overhead expenses. If something's been changed in the budget, make sure that when you're calculating these results, that the correct figures are used. A lot of the costs they know their payroll costs, they know their sales, they know what the rent is. Electricity, well, they can read the meters and determine the electricity cost and so on, so that there's great results. Now, one of the benefits of this is when the monthly accounts are prepared, and yes, they should be prepared. Don't just rely on the weeklies. You prepare the monthly financial accounts as if it's the end of the financial year and compare the weekly results back to them. And the 4 or 5 weeks in the month should be adding up to the results shown in the monthly financial accounts. In fact, in my public company days, the CEO used to say to me at the end of the month, when he knew we'd finished the accounts, does the monthly accounts prove the weekly results were right, Peter? Most times I could say yes. And he said, very good. And I don't think he read the monthly financial accounts much at all at that stage. He might have over the weekend at home. But his main concern was it's proven the weekly results, because he was enforcing the weekly results onto his managers. Now, over the years, I've got to know Woolworths managers. I've done work within IGA stores, and exactly the same process is being used, except a store might not have a whole range of businesses, but within the store they have. The Woolworths manager that I got to know had 42 departments in his store. And he told me that from Monday afternoon to early Tuesday morning, he was getting the results for the previous week's trading. And if he had a problem, he would sit down and talk to that manager in detail. He talked to all the managers, but hopefully most of them were, they ticked the bottom box. The profitability target had been achieved. There was nothing abnormal. It's a great way to run a business, isn't it? It's giving management that assurance that the decisions they've made, the stock that they've purchased, or whatever the processing's been, at the end of the day, they've made the targeted profit. So we can assist in all this because we have put together a package which gives you a complete service that you can introduce to your clients, not to just get an annual set of accounts out and the tax return, even though both of those things are important. So it all starts with the business plan. I think every one of your clients should have a business plan, and it should be renewed every year. There should be a sit down. In fact, we talk about that a little bit later on. It's a business plan that's set in stone. This is what we're going to try to achieve this year. And the leadership teams of the clients should be involved in the preparation of the business plan. And then we should have some budgets for each business operation, not consolidated into one profit and loss account. And if you're in a business whereby it's a tradie business or a manufacturing business, so there's calculation of charge out rates for the individual team members, the skilled tradies, the apprentices, the not so skilled tradies, and so on. That calculation can be made as part of the budgetary process so that you can see where your revenue is going to come from. Another big question is what markup will be applied to external purchases made for clients, and what's all this work out at? Then we need to look at the key drivers. Now, the key drivers are the key sub-accounts that get left out of a lot of budgets and cash flows. It's the debtors forecast. So in the debtors forecast, one of the clear figures is the KPI, the debtors days outstanding. Now, I've seen some horror budgets over the years where people have done their calculations in a budget and assumed that the debtors days outstanding are going to be 30 days. Yet when I go back to the previous set of financial accounts that that company had, and I do the calculation, debtors days outstanding is up around 60 days. And I say, well, how are you going to get it from 60 to 30 in literally 1 month? That's not possible. So what the key drivers force you to do is really concentrate on key items, debtors. Creditors, I think creditors in a lot of businesses should be split into two components. One is the prompt creditors, and they would normally relate to the key suppliers to the business. The suppliers that if your client didn't have them, he probably or she would be very embarrassed because they wouldn't have the key products that they need to sell to their customers. And that can come about because the supplier said you must pay us very definitely on a 30-day basis or a 14-day basis or a 7-day basis. And if you don't do it, well, we won't supply you and we'll take legal action to recover whatever's owing to us. So the creditors forecast, both for general creditors and for the high priority creditors, is very important. And it's one of the key performance indicators that should be continually monitored for the high priority creditors and the normal general creditors, so that you have a better feel for what the cash flow position will be, because these high priority creditors will want to get paid. And then we have the inventories, we have research and development activities, if your client's company's undertaking those, and other things. The labour team that's working in the business. The cash flow forecast obviously gets input from the individual business activities, the key driver areas, debtors, creditors, and sometimes from the balance sheet, because there are loans there that are getting paid off, so the amount of the loan must be paid. So we'll have the cash flow forecast. And then the projected balance sheet. I love projected balance sheets, and I love the software that we use, Plan Guru, because it will prepare projected balance sheets 1, 2, 3, 10 years in advance if you want to go that far. And then you can become the storyteller. You can communicate with your client to say, if you can achieve these things over the next 3 years, you've all sat down with me at the leadership team, and we've gone through and discussed these issues. I have now documented, and you'll go through them and explain how each of it works, how it all fits together. And then we have calculated this projected balance sheet. So this is going to be your position in 1 year's time, 2 years' time, 3 years' time. There's a lot of things happen in a business, isn't there? Daily problems. There's always crisis. And it's very reassuring to the owner to sit down. Okay, so you're telling me if we can do this, if we can employ 25 people doing these jobs, if we can continue to achieve our markups that we're currently doing, we can go ahead and open that new branch in another town. We can do some research and development and develop some intellectual property for our business. This is where we'll be in 3 years' time. That's very reassuring. Now, that's real accounting services, as I see it. The client's going to get daily reports for each business operation. They're going to get the weekly performance and profitability estimates and the monthly accounts. We're giving them a real business system. And they're going to get comparisons of actual performance for each business operation. And we've talked about the balance sheet analysis. But it's important to emphasize it. This is important. Debtors days outstanding, creditors days outstanding, stock turn, etc. Do you do any of that for your SMEs at present? Are they conscious of checking this? And the cash flow analysis, looking at the variations from budget. What's that telling us? And at the end of each month, rolling forecasts can be prepared so that we don't change the budget that's been done for the year, but we look at rolling forecasts. So a separate exercise to say, well, we thought we were going to be in this position, but because the price of certain key components has increased, or some of our key debtors just will not pay us on the 40-day basis that we budgeted. They're paying us on 60 days. This is what is now shown within the rolling forecast. So you can then include all this information in your monthly financial report so that you have explained to your client why you thought they were going to be in a certain position as per the budgets, but the rolling forecast is now adjusting that to say, well, these things have already occurred, and we can now see some headwind in front of us in certain areas. And so this is what we now believe the revised result's going to be. I can assure you, in the public company that I was involved in, that was a task that was being attended to religiously every month, and sometimes a few times during the month, trying to reset where we thought we were going, because things change. But the key thing is having the documentation that the CEO gets confidence in you, that you say, well, we're going to be there, we're now going to be there because these are the changes. He knows the changes, or she knows the changes, and we've now factored them in. The reality tests, we've brought it back to show you. Now, it's then up to management to say, well, we've got to try to pick up that $150,000 you've dropped off our bottom line there because of certain changes. We're going to look at other ways we can try to recover that. And we've still got 7 months of the financial year, so that's great. Thanks for letting us know. We now know what we've got to do. In other words, they're not waiting for the end of the 12 months and saying, geez, we've missed our target. By then it might be over $300,000 in the bottom line. Pity we didn't know about this during the year and understood how it all fitted together. Now, the monthly financial report would go to the board of directors or the board of advice if your client has one. Very important. And you may well be a member of one of those groups in any case. So let's go through and look at some other things now. We've been looking at the formal side, the periodic work. Earlier I talked about the business plan being updated. I like doing that within strategic reviews before the end of the financial year. It's the planning for the following year, and it's the action plan to make all this come to fruition. You've got a business plan. It's a bit of a formal document, of course, but the strategic review is bringing your leadership team together for 1.5 days, preferably at a remote location, away from the office, away, phones turned off, and really thinking through the issues. What are the key objectives we've got to hit in the next 3 months? And then what comes in the following 3 months, and so on. Making the plans work. And obviously, the income tax returns still have to be done, but so does all this other work. Let's look at the virtual Chief Financial Officer services. Well, one of the big ones can be business funding. How's the business going? We talked before about fluctuations, changes that occurred during the year. Does business need more funds? And where are they going to come from? Well, let's look at loans. Is the client in a position to be able to borrow more money from a bank or some other financial institution? Normally, those organisations require security. Has your client got that security? Is your client interested in raising capital from the public? We have 4 opportunities available for SME companies to raise capital. Section 708 of the Corporations Act can raise up to $2 million in 12 months from a maximum of 20 investors. You just got to worry about the 50 shareholder limit. If you did that for a couple of years. Crowdsource funding, equity raising, a great initiative. It took a long time to come in Australia. We were nearly the last of the top 20 industrial nations to introduce crowdsource funding, equity raising, but it's there now. A client, SME company, turnover under $25 million, gross assets under $25 million, can raise up to $5 million in a 12-month period. And they can go back and try to raise it again the following year if they get the support of the crowdsourced funding intermediary, who's a capital raising expert that's been given a special license by Australian Security Investment Commission to guide companies through the final process. But your clients need you well before then, because they need business plans, budgets, cash flows, projected balance sheets, the identification of the vision for this company. Who's the leadership team? Who are the directors? So a lot of work goes on before you introduce your client to the crowdsourced funding intermediaries who handle the actual capital raising. They use their websites. It's a great process. Early stage innovation company was the stablemate of crowdsourced funding, equity raising. And it's there to help companies that are on the innovation journey. They've been undertaking research and development. They're trying to develop some new technologies. And the government gave a carrot to help investors make up their minds to invest in these types of companies. And the carrot is the investor gets 20% of their investment as a tax credit. 20%. So if a sophisticated investor invests in the company, they potentially can claim $200,000 as the tax credit. Obviously, that's calculated as on $1 million investment. They can invest more than $1 million, but the maximum credit they can get is $200,000. Now, if they're a retail investor, they can get a credit of up to $10,000, because the maximum investment that a retail investor can make in a single company, early stage innovation company, is $50,000. And then we've got venture capital raising. Now, I wouldn't suggest this as a first up venture into trying to raise capital for any company. They, I think, need to have gone through the process with one of these other three raising money first. But it is there. They will definitely need very good financial reports and their business plan and budgets, but they can use it. The Chief Financial Officer Services, advising the CEO. I found when I was in that position, I had meetings going on and off all day. I don't know how many hours a day I spent answering the CEO's requests or having a conversation with him or sharing phone calls with people overseas, our main buyers in America and England, Japan. But it was at least 2 to 3 hours a day, on and off, over a 10-hour day, looking at things. Someone had rang the CEO and said, why don't you do such and such, such and such? He'd write it on a bit of paper and ring me and said, can you go and have a look at this? Can you get a calculation done on that? Should we be switching production tomorrow morning from supplying these meat products to Canada to selling them to Russia? Because this is the offer that's been made. Those types of things happen in every business, not just the meat industry. Everyone's got decisions to make. And a lot of your clients are sitting down late at night at home, tired, maybe had a couple of drinks, and they're trying to do these calculations. This is part of the service you can be supplying to them. The other big area is corporate governance. The leadership team need to understand how the board of directors operate or a board of advice operates, so that they can work carefully with them, make sure the right information's been prepared. Risk management monitoring, the personal property securities register. People can get into all sorts of trouble through ignorance of that. What about government grants? Research and development's a great one, especially for companies with turnovers under $20 million, because 43% of the R&D expenditure is the calculated rebate. And if that company happens to be trading at a loss, they can be paid that cash amount of that R&D rebate, 43% of their R&D expenditure, within 30 days of lodging the company's tax return. Export market development grant. It's there for exporters. Any type of business with a turnover under $20 million can claim it. And the claim could be as high as $770,000 over 3 years. They don't have to be consecutive. It could be over a 7-year period. Just 3 years have been selected when the business was doing something different, something new. Or it could be an Australian-based business that's supplying services to overseas tourists to Australia. They might be operating ships or boats that go out to watch the whales cruising up to Queensland and New South Wales coast. They might be operating business to go out to the Great Barrier Reef to take tourists out there. As long as they're spending money to promote their services in overseas countries, they can be eligible to claim the Export Market Development Grant. The new grant that was released in November was the Business Growth Grant. That replaces the very popular Accelerating Commercialisation Grant that ran from around 2011 to 2023. And that new grant has got a maximum grant availability of $5 million. Now, that's on a 50-50 basis, so it's a pretty big project for a company to be undertaking, but it's there. You don't have to try to raise $5 million. Your client might be quite happy if they could raise $1 million. They've got $1 million that they've raised themselves, or they're going to secure from new shareholders through crowdsourced funding, equity raising, to build their business up to take the new product that they've developed through their own research and development and introduce it into the market. And there's hundreds of other grants offered by the Australian state and territory governments that are available, that we have details of within our system that you can use. The internal control reviews are very important. And I think performing the company secretary role and being the financial storyteller for the business that I mentioned before is very important. You have to try to help the management team overcome the problems of small business. You can be the interpreter of the financial information and guide them on this process. And there's commercial services as required. It might be buying a business. We've got a full product package in our system on that. Selling a business, same thing. Debtors management. Debtors are a huge problem. I've alluded to debtors a couple of times. I won't go into any more about it now, but there's a full package. Succession planning will come into play in most of your SME clients. Survival in difficult times. There's always a difficult time somewhere in Australia caused by climatic conditions. But it could also be caused through the close down of a large business in an area. What's the effect? Got something to help you on that. Now, the financial forecasting package has got a lot of emphasis on predictive accounting, budgets, cash flow forecasts, projected balance sheets. And we utilize the Plan Guru software. This is a product developed in America by an accountant, and the company is now managed by his son. So it's a product package for accountants to use to prepare budgets and cash flow forecasts. You'll get a license to use it for up to 10 clients. Normally that only applies to 3 clients before you have to pay an additional fee. So that's a big benefit that we've negotiated with Plan Guru. There's special training offered by Paul Barnaby, a fellow of the Institute of Chartered Accountants, who's a walking encyclopedia on predictive accounting issues. And he will train your team on how to use the Plan Guru software. And we also have an organisation which we've formed called the Certified Practicing Accountants. And there is a course training that Paul Barnaby and myself assist in the mentoring of the participants. And there's an exam at the end. And if you pass that, we will gladly award you a recognition of being a certified practicing accountant. And your team members can participate in all that. Now, the cost of the software from Plan Guru, the cost of the training by Paul Barnaby, and the accreditation for one person from your team in the certified predictive accounting course is included in the subscription. I've already discussed the predictive accounting reports, and you also receive notes on each of those items. So your investment in the financial forecasting package, this is a special price applicable to the 7th of May, is $10,560 inclusive of GST. That gives you access to every article, product, video, etc. that ESS BIZTOOls has produced, plus the Plan Guru software, plus the training on the use of the Plan Guru software by Paul Barnaby, and the training for one of your team in the Certified Predictive Accounting course. Or you can pay monthly if you like, 12 payments of $1,056, including GST. If you're only interested in going to the advanced package at this stage, which is the package below this one, which is basically the same except it doesn't include the Plan Guru software or the training or the course accreditation, that will cost you $5,400 plus GST, so that's $5,940 as an upfront payment, or you could pay it in 12 monthly payments of $594, including GST. I think you should be able to achieve an attractive return on investment on those costs. Now, group training, ESS BIZTOOls presents a 1-hour training presentation for each of our product packages. We have 4 of them, 10 times per annum. So we produce 40 training packages over a 10 to 11 month period, 10 times per annum. There's no additional subscriptions, and you can go to whichever training course you want. We'll be publishing our program next week for the new period commencing from 1st May. Now, if you want to have one-on-one training or one-on-your-team training by utilising Zoom to do that, we can do that. Training to your team, it'll cost you $300 plus GST, and we will be happy to give you a proposal on the delivery of that sort of training, which some people prefer. Now, to subscribe to ESS BIZTOOls, which I hope you're interested in doing, you just go to our website, www.essbiztools.com.au, click on packages and pricing, and then the product package that you wish to subscribe for, and then complete the subscription process. That's all there is to it. And then we'll be in contact, and we will be inviting you to attend a training package. Each of our product packages has a training package in the month of May to get us all started and underway. And we believe that this subscription will assist you to really deliver advisory services that are very beneficial to your clients and prospects. Now, if you need more information, please send me an email, peter@essbiztools.com.au, or telephone me, 0747 24 I'll say that again, 0747 24 I look forward to talking to you and helping you to introduce ESS BIZTOOls product packages, whichever one you select. The one we're obviously talking about today is the financial forecasting package. That's the big package that we have in conjunction with Plan Guru, to assist you to have an ongoing resource base of material that you can use in your accounting firm to add value-adding services to your clients. As we write new material during the year, you will get access to it. Each month you will receive the Business Plus newsletter, which you badge and you can send to all your clients and prospects. And that's a marketing tool to really show your clients and your prospects that you're interested in a wider range of activities than just taxation. So thank you very much for watching this webinar, and I look forward to hearing from you. And please, if you do have any questions on any matter that you don't think we discussed today, or we haven't given you an appropriate answer, please contact us. and we will get the answer back to you on whatever that question is. Stay safe. Have a great day. Goodbye. And I look forward to hearing from you. Thank you.